Good morning. Please, if you can hear me, type a yes in the chat box. Hear me? Just type a yes. Please, if I'm being heard, please type a yes if you can hear me clearly. All right, thank you very much. Good morning, everyone. Apologies for starting behind time. So, to 80 minutes. All right, so all right, so let me share my screen so that we can see what we are looking at. I will share my screen. We'll be looking at forexfactory.com. But if you look at the calendar this morning, you notice that we already had some major events early on the British pound. So today is Thursday. So we have GDP on the British pound, and on AUD, we have unemployment rate. So these news have just occurred, and we have some rates on pound AUD. So if I were to trade any currency pair based on the news calendar this morning, I would go for pound AUD, which is exactly the currency pair I traded. So I'll show you where I've entered the trade of pound AUD and where we are currently. Now, the next event we have is by 1:30, which is 4 PPI and the PPI and unemployment claim. These are the next events we have in the afternoon. So let's look at a couple of instruments. So we don't have much for today. Apart from this PPI, the news on the pound has already happened. The news on the AUD has occurred. So we had more favorable news coming from Britain based on the data that was released. So if I go to the chart now, so I'll be sharing my screen, my chart, so that you can see some of the, so that we can see some of the instruments that we'll be looking at for today. So I took a trade based on this news this morning. I took a buy trade on pound AUD. Now, the reason I was buying pound AUD was because news on the British pound was deep, and the news on the AUD was really negative. It was as expected. When the news dropped, the market did not really respond immediately. The market was still undecisive. Eventually, it moved. So let's look at that particular asset, which is pound AUD. So let me pull it up. Pound AUD, and the movements based on the news that was just released. So if you look at the analysis, the analysis of this instrument, I was actually expecting a buy trade, a buy move, a move on pound AUD. So for those of you that have attended my morning session before, you will know that I use more of Fibonacci for my analysis. So all I needed to do was pull up my Fibonacci. So this up here, I don't know if you can see my cursor. I believe my chart is visible. So this two up here is your Fibonacci. So pull your Fibonacci from the low of yesterday. So I'm targeting low of yesterday. High that was recorded yesterday. So this is what I've just done. I've drawn the fib from this high, this low down here to that high. And then I'm expecting the market to retrace to at least 61.8%, somewhere here. So this is 1.8. That's exactly the position where I intended to enter the trade. But sorry, I did not really catch this move because it was very early in the morning, so I didn't see this. But I was able to re-enter at this region. So take a buy from around here before the news came out, and actually I'm still in that trade. So on pound USD, on pound AUD rather, still expect a continuation to the upside. So what we might experience is a slight retracement. So we might see a retracement because if you look at the fundamentals on these two assets, pound and AUD, the AUD is they've already begun the cuts on interest rate for the Australian dollar. So we expect a depreciation in the Australian dollar for a couple of weeks. So what I'm expecting right now is you can wait for a retracement to around this region, and then hope to enter your trade from somewhere here. So at this juncture, if you do not enter earlier, then you can just hang on for a retracement. Now, how far can we expect this asset to go? I'm expecting this instrument to go as far as the high price from last month. That will be around this region. So if I draw a line, so let me just draw this line. So this line is from last month. So I'm expecting the instrument to expand all the way up to around this region. So if you look at where we are today, you look at where we are right now, and where I'm anticipating that we would expand to, you notice it's still very far, which is all the way up here. So we still have a long way to go up. So Pound AUD, one instrument that you can always target, you can always enter, even if you did not catch the move to the upside. If I draw my expansion, there's a tool called Fibonacci expansion from the high and then extending it to current retracement. You see that we would most likely expand all the way to this region, which is where we are right now. So we see the first level of expansion, which is where we are. So that's why the market has paused, because we just hit our first expansion level. And the next expansion will be all the way up to this region. So if we break this level up here, then we should proceed higher to this region, up here. Now, this expansion is drawn from still yesterday, from the low of yesterday to the high of yesterday, anchored at the retracement, and then you get how far the market will expand after a retracement. So the two I use for my analysis, Fibonacci retracement and the Fibonacci expansion. The Fibonacci retracement tells me how low, how much I should expect a market to retrace, and the expansion shows how far the market is likely to expand after a retracement. So the levels you see on the chart that I have not labeled, or let me change this color. So the level on the chart, or the box on the charts that is in green, so these green boxes on the charts are based on the Fibonacci expansion, showing me how far I should expect the market to get to before possible retracement or reversal. You can see that we've just hit the first level, and the blue level you see here is a Fibonacci expansion of 61.8%. So if you miss this level down here, which is this blue box, then your next entry could be somewhere around here, which means if you're to take a trade again, wait for a slight retracement, because since the market has hit this level, now this level here is a major resistance. There's a tendency for it to place a little and then continue. So on Pound AUD, what you see on the screen is what I'm expecting. For those of us that want can wait for that to happen. Some other persons might even want to buy from where we are currently. Very possible. If you have reasonable capital, you can buy from where we are right now with your stop loss below this level down here. So look at my cursor. Let me just ask this. Am I being heard? Can you hear me? Please, if you can hear me, just type a yes. If you can hear me, type a yes. All right, good, nice, thank you. All right, good, thank you very much. All right, so this is a valid analysis. This particular instrument, you can always monitor it, check it, and then only look for buys. When the market retraces, let it retrace. Look for opportunity to enter a long. I am currently in a long on this trade. It's actually a long-term trade. The trade I hope to hold sometime next week. You may not need to hold it that long. You can just find a way to enter at any of these retracements, and you will hope that you continue higher. Now, the fundamentals on the British pound is positive, and that of the AUD is neutral. It's not really bad, neither is it good. It's just neutral. So, and the technicals we are seeing also suggest that we might extend higher. So, with that being said, this is the kind of opportunities you need. So you need just one or two of these kind of opportunities every single month. So good to go. This same thing will most likely play out on pound USD. So if you look at an instrument like pound USD, you would most likely see the same scenario where the pound is expanding to the upside against the dollar. So this is pound USD, and if you look at it very well, you notice that the pound has been going up against the US dollar because the fundamentals, like I said, on the pound is very positive. And so I'm looking for my charts to few seconds. All right, so that's loaded. All right, so see where we are on the British pound. So this is pound USD. Right now, we have just hit a major level, the region up here. So at this juncture, it's possible we might just retrace a little before we proceed higher. So I would most likely expect the market to continue higher. Now, I'm a fan of looking at previous months, previous weeks high and low. So if you look at, I am currently on D1. So this is the chart of D1. And what that simply means is that this is our last month's movement. So this is how much the market moved last month. And it's very good. It's possible that we may have a slight retracement from where we are now. You draw your fee from last month's high. So I'm on D1. Look at my time frame. This is D1. So if you draw from the highest price from last month to the lowest price of last month down here, notice that we have just retraced 1.8 of last month's movement. What that simply tells you that why we're there 61, there's a possibility that we might retrace. So I'm not really expecting a reversal from this point. I'm not expecting a reversal. But what I'm expecting is possible push down. So I'm expecting, remember, we have high impact news on the dollar in the afternoon. So this might most likely push it down before we continue higher. Now, if this does not come down, then that means we'll just continue higher. So if you draw your fee, once we break above 79, look at 79% of your fee. Once we break above 79, then that means it's a continuation to the upside. If we can successfully break above 79, then we proceed higher. But for now, since we are already in this region, which is our 61.8, I'm expecting a mild retracement to around this region. So if we retrace back down to this area, Let me change the color. Then that would be a very good buy here, and then wait for the market to expand upon USD. All right. All right. Sorry about that. I had a break in the traffic. It's actually very bad. Sorry for the disconnection. I'm back online. All right. So we're actually looking at the pound USD. So this is the chart of pound USD. So right now, I would not expect too much retracement. So what I'm expecting is just a mild retracement on pound USD. Then we continue our move to the upside. So that being said, and what you see is what I'm expecting right now. So I want to see I will have just where we are currently to see a mild retracement and then a continuation higher. So there are two options right now. So for those of us that are here, you can decide to take a sell from up here all the way down. Now, how low are we expecting this sell to get to? You don't want it, you may not get below yesterday's low. So look at this very close. Let me show you something. So the movement to the downside may not exceed yesterday's low. If you're selling with the hopes of catching a move to the upside, be a slight, sell to buy. If you draw your feet from yesterday's low, sending it to yesterday's high, see, we now have this region over here where we might most likely retrace to. So where you will most likely see a retracement to this region before a push to the upside. So this is what I'm expecting on the pound USD. So on the pound USD, I want to see a push down, then a continuation to the upside. Now, what that simply means is that for those of us that might not wait for, my best option would be to wait for the market to get here and then buy from here all the way up. But you can also sell from up here down to this region. So you can sell from up here down to this region. Stop loss just above the highs. So just place your stop loss above these highs. Place your stop loss above these highs, and then target your TP within this region. Now, this shaded portion you see down here is our 61.8% of yesterday's movement. Remember, yesterday I have measured my feed from the low of yesterday down here, and I have extended it to the high of yesterday. So I'm expecting the market to retrace down to this region before a continuation higher. I would prefer, or I would be much comfortable taking a trade from down here, a buy trade from down here. But for those of us that want to join in on the action, you can take a sell all the way down with your stop loss above this red region profit down here. And then when the market gets down here, you can engage with a buy trade. So if you're buying from here, your stop loss should be below yesterday's low. Yesterday's low will be here, somewhere around this region. Place your stop loss for a buy, and then you target movement to the upside. So if you want to see how much the market is likely to expand, then I'll be using the expansion, the Fibonacci expansion. This will show me after a retracement how far I should expect the market to get to. And that will be not from my high, from my low to the high, 1.8. So my expansion would be this level here. I buy from that region, then I'm expecting the market to expand all the way up here and all the way here. These are the two places I will expect the market to get to. These are major support and resistance. You can draw this fib retracement and expansion, then you should be able to get your support and resistance easily without so much guesswork. So this is not guesswork. It's based on the numbers of the Fibonacci. So you can say from where we are all the way down to this shaded region. Your stop loss above here, so my cursor with your stop loss above here. And when the market gets to this area, you can take a buy from here, stop loss below yesterday's low, targeting this green shaded portion. Any question? So on the analysis we've just done, do you have any question? Any questions so far? All right. So is there anybody that would like us, any instruments would like us to quickly look at before our time runs out? If there's any instrument, feel free to drop your instrument in the chat. All right. Someone is sending 30. All right. So while I wait for that, let us look at the Euro USD. So while I'm waiting for that, let's quickly look at Euro USD. All right. So let's quickly look at Euro USD. Then after that, I will then questions you have and then answer the questions accordingly. All right. So on Euro USD, we can see a push to the downside. That's because we had some news on the euro. But those news on the euro, so those news on the euro, they are major news on euro. It's expected to be by 10 o'clock. So by 10 o'clock, those news should be rolling in. So what I'm expecting on the Euro USD is just like you can see now, we are seeing a retracement on its instrument. So how much retracement should we expect? So if I draw my fib from this expansion here all the way up, so I've just drawn from this low here, look at my cursor, from this low here, all the way up to this. I know some of you might be wondering, why not all the way up to this high? I am trying to catch a replacement of this other expansion. So this is an expansion in price. And then why is it an expansion? If you look at the movement in this candlestick, you notice we have 1, 2, 3, 4, 5 bullish candles. That's an expansion in price. Now, there's usually going to be a retracement to that move. Now, if you look at this other move here, this is 1, 2, 3, 4, and a retracement has already occurred. So there's a complete reversal of this expansion to the upside. So the next region I'll be expecting the market to most likely get to is somewhere around here. So this is 61.8%. Let me change it to color. So this is where I will be expecting the market to be. So on Euro USD, I am expecting a continuation to the downside all the way down here. And then from here, so, which means two options. Now we can wait for it to come down here and then we buy, or we can sell all the way down. For us to sell down, let's look at this. For us to sell to that region, I would want to see the market come back somehow, retrace a very slight retracement here. So if you can retrace back to this area, which is where we are all the way up here, and from there we can sell all the way down. So this is what I actually want to see. Else, for those of us that have a good capital, you sell from where we are right now. You can sell from where we are, place your stop loss above consolidation. So you sell and place your stop loss somewhere above here. It's a very tight stop loss. Sometimes it's good because our actual direction is to the upside. So you can place your stop loss around somewhere this region and expect market to continue falling all the way down to this area. So on Euro USD, I expect a continuation to down. Pound USD, like I said, I'm still expecting a mild movement to the downside before a continuation of the uptrend. So for today, I'm expecting retracements on most of the US pairs. Most of the US pairs should experience a retracement before we proceed higher. All right, so let me just take a few minutes to go through the charts and then answer your questions. All right, so someone is saying Euro JPY, Euro JPY, you're on a buy on Euro JPY. So look at Euro JPY, E30, US 100. I'm saying wheat and oil, US 100, silver, silver and gold. All right, so let's look at Euro JPY. All right, so on Euro JPY, so I'm currently looking at the H4 time frame. So this is H4. Now we are seeing a push to the downside. So the euro is experiencing a slight weakness. I don't really know why the weakness, but I think after now we check it because a sudden move to the downside. So it's because the pound is gaining strength. So sometimes there's this British pound and euro. The British pound gains strength. The euro, you can see this clearly from this instrument, pound, JP pound, I mean, euro pound. So if you look at euro pound, sometimes when the pound gains strength, you see that the euro begins to depreciate. Sometimes that correlation happens that pound gains strength and the euro gains strength. But in this instance, we are seeing the depreciation in the euro because the pound is gaining strength. So it's euro pound. So I think that's one of the reasons why the pound is currently weak across board. From what we are seeing currently, if you draw your feed, H4 now, if you draw your feed from here, which is the low from last week, send it to the high of last week. I've just drawn from the low of last week to the high of last week. You notice that I've just got into an equilibrium level. So this is a equilibrium position from last week. Look at this. My feed was drawn from this high, which is from last week's high, from last week. Take note that I did not extend it to this high here. Look at the high of this week. I am not using the high of this week. I'm only using the low from last week to the high of last week. Market has expanded or retraced to equilibrium. I would want to see on pound JPY is for the market to continue lower to at most 1.8, which is somewhere here. So this gray area, that's our 61.8%. So I would want to see the market come down, continuation down to this 61. Then I will think of buying. So for the guy who is already buying pound JPY, if you said you're already on a buy on pound JPY, then I would suggest that you just hold a long, just be patient. Well, I don't know where you entered from though, but there's a high tendency pound JPY will snap back up. You have I don't know the position you entered or the price you entered from, but if you have, yeah, if you have the means, you can just hang on a little. If there's a high tendency back up. So it might replace a little. What it has left, it might not be so much. So it might just push go down again, final move down before now snap back up. So if I'm in this trade, I would most likely hold my buy. If I'm in a buy trade on pound JPY, Euro JPY rather, I would hold my buy, wait pending for when this retracement end. So this is actually just a retracement. You can even decide to start going back up from where it is right now because it has already tested our zone. Our zone is this area, this gray area. So it has already tested that region, which means there's a high tendency the move up might just begin from here. So if you're already in a buy trade, just hang on that buy trade. Else, if you're new and you want to take this trade, it's a good opportunity for a buy from where we are right now. Once you buy at this level where we are, replace your stop loss below 79. Now, once the market breaks below 79%, it means that we are no longer retracing, but we are now reverting. It's now a reversal, no longer a retracement. But for the meantime, we are still experiencing a retracement on Euro JPY. So that's that for Euro JPY. I think who asked that question? All right, so I think that has been answered. So let's look at gold. Quickly look at gold. All right, so I'll look at gold, then I'll show you how I edit my fib to capture these levels. So before I call it, quickly look at gold. All right. So this is gold one. I'll start my analysis by looking at H4. Now, if you look at H4, last week, we're actually in a crazy range and the market has retraced substantially. So why am I saying it's a retracement? If you look at this big move from up here all the way down here, market has, and then we are now moving back down. But there's this movement, there's this area, this fair value gap down here. So on gold, I'm expecting a continuation to the downside. So what I mean is, I want to see gold push down all the way down to around this area. That's what I'm expecting. Remember, we have looked at Euro USD, we've looked at Pound USD, and then we are now looking at gold. Something common on the three. The dollar seems to be gaining strength. So dollar is gaining strength. We expect that gold prices will depreciate. So if that is, then I want to see a push to the downside, all the way down to around this region. Now this is on H1. On H1, we are almost at yesterday's low, at the low from yesterday. We are at yesterday's low. It means since we've already broken, in fact, we've broken yesterday's low price. So we have created a way to continue lower. So we might most likely continue lower. So if I'm to engage on gold or gold, if I'm to take a trade on gold, I would wait for slight retracement. Now, the reason why I keep that word wait is because I don't like selling at the bottom and I don't like buying at the peak. So if I'm buying, if the market has moved just like we have for today, look at today's movement, I would not want to buy down, sell down here. So what I would prefer is a slight retracement to the upside, then I buy. Still use your feet from this high here, low down here, then you want to see the market retrace to somewhere around here. So let me change this color to a blue color. So see a retracement to this area. I want to see a retracement to this area before we now proceed. So what I'm saying in essence is push up and then sell. Hopes the market continues. So exactly what I want to see. Market retrace all the way up to around that region, then we'll continue lower. Remember, already taking out yesterday's low. Look at the request price from yesterday. It has exceeded it a little, but not much. So which means a new low has already been created for today. And if a new low has been created, most likely we will just and if you look at the dynamics, if you look at the movement in price, you see we're actually heading down. And also, currently, the dollar is gaining strength because if you look at the other currencies that are paired with the dollar, you notice that the dollar is on the rise. So we anticipate that we should see a continuation to the downside. It may not be for too long, but movement down should just be enough for you to make some profits in gold. And one of the things that we should have looked at is the dollar index. So let's see if I can find the dollar index. So the dollar index will help us to see the overall picture or the overall direction the dollar is currently moving in. For hence, so I think that's all for analysis. So let me quickly show you how you can edit your feed. So this is the feed. So once you click on the feed and you drop the feed on the charts, so the levels we use more on the feed, or the level on the feed that is of more importance, in my opinion, is 61.8. What you will mostly experience is that market retraces to around that region. That region, 61.8, is regarded as a natural number. It's a natural number that occurs naturally. And it's more like a pivot point is a number that ensures efficiency. So if you take your time to research on the field number, you will notice everything in nature is balances or has balance around 61.8%. So once there's a retracement, we expect it to end around 61.8%. Now, any retracement that has gone past 79 is no longer a retracement, but a reversal. So if there's a trend, if there's a movement in price, and that movement moves, and that movement retraces to 79%, then you don't expect that to continue retracing the reversal. So let me quickly show you how you do it. So you drop your speed right on the feed, right click and select properties. So you see properties, tap on properties, and then in each common, you see common, then but come to levels, look at levels, tap on levels or click on levels. Your levels, you now adjust the parameters. So the most important one there will be the 61.8. Under levels, you are going to use 0.618 level. The description will be 61.8. The level I call equilibrium, actually 50%. And 50% is 0.5. So you type in 0.5 under levels, and the description, you can use whatever I use. And then most times I will prefer to enter at 0.71. Your level is 0.71. Type it as entry point. And then the last level will be 0.79, and you describe it as 9. So that's how you can configure the fee. The other numbers I have on the fee, that may not be necessary at this point because we don't have any time. So I have other numbers on the fee, which are the same as Fibonacci expansion. But that may not be very necessary at this particular time. All right, so I think that's all we can take for today. Thank you for questions and for the questions you have asked. If you have any other question, and drop your question while we are still online. So I want to believe that those of us that asked questions, your questions were properly answered. Now, if you want to reach me, this is my number. So you can see my number on the screen. That's my number. You can send me a WhatsApp message on this number. If you have any further question based on what we have discussed, you can always reach me. All right. So thank you very much. See you some other time.